Retirement is all some people ever think about, especially the 50 million plus Americans set to retire in the next few years. They obsess over it, like my dad did. It's what they worked for, it's their dreams. Raoul Pal explore why we're heading into a retirement crisis in America and around the world, as many people take on more risk than they understand. I was curious to see if anyone was thinking about this, so we spoke with people in New York and heard the same story over and over. People pushing off retirement, people not having enough savings, people relying on government pensions. Here's some of what they said.
No way I could have saved enough for retirement.
My name's Raoul Pal. I'm the CEO and co-founder of Real Vision, but today I'm talking on behalf of Global Macro Investor, my research business. I want to talk about what I think is the biggest single theme of our generation. And I think it's the most important thing that anybody can understand. And it's all about the pension crisis. You see, demographics is the big story of our time. That's the real issue. The real issue is all of this is coming to a head because everybody is about to retire. If you look at the chart of the baby boomers reaching retirement age, you can see it's a demographic wall. Currently, we're retiring at about 3.9 million in America alone, baby boomers, because retirees have a different behavior pattern than the average person. You can see the chart in a different way here. You can see that the average retirement age is currently around 64 in America, and this year, 2018, the average baby boomer is 64. It's telling us the average person is destined to retire this year. But the real question is here, who can afford to retire? You see, if we look at the retirement age of Americans, the actual retirement age is going up. And those who haven't retired, they're deciding that they're going to have to work longer too. You see, the real issue here is that people can't afford to retire. You see, the problem is these people are benefiting from one of the biggest shifts the world has ever seen, life expectancy. Life expectancy, although it dropped a couple of years running recently in the US, is rising. So life expectancy in America and across the world is in an exponential trend higher. Now, in a rising equity market, this kind of makes sense. You're clawing back some of the ability to retire. But if things change, the picture gets a little bit worse. You see, the one bet people are taking is they're actually putting the maximum allocation in all of recorded history across the entire system into risk-seeking equity-like assets when equity valuations are off the charts. You see, when we look at the chart of the median price revenue of the S&P 500, we can see it's at all-time ridiculous record highs. You see, the real problem here is it's all about the business cycle. The business cycle, as you know, ebbs and flows. You can see it on the chart here. It goes up and down, and it's relatively predictable within some boundaries. But what happens is a peaking, booming economy eventually gives way to a recession, and they come along periodically, every 4 to 8 years. Now, what's interesting about this expansion is this is the second equal longest expansion in all economic history. And by next month or the month after, this will be the second longest outright. So what that tells you is there is a probability that this expansion has to end at some point. Could it roll on for another couple of years, 2 or 3 years? Of course it could. Could this end up being the longest ever expansion? Of course it can. The point being is the clock is ticking, about the velocity of money. And it's a key indicator for inflation. You know, if money's moving around the system, it tends to be more inflationary. It kind of gets around the system a lot more and creates inflation. Now, the problem is velocity of money is essentially a demographic phenomena. The older people get, the more they save, and the less they spend, and the money doesn't go around the system. They're not reinvesting it in things, they're not spending as much, and like consumption, it tends to fall over time. You see, because of the demographics, the labour force participation rate is about to fall off a cliff. Yes, there's a bit of wiggle, but 2018, 2019 is we should see a collapse in labour force participation. Now, if you said the future expected return from a cryptocurrency over the next 30 years is 0 or 1 million, and we're at, let's use Bitcoin as the example, we're at about 8,000, 7,500. Well then, as a millennial, you're basically faced with the same fact set that you had in equities back in 1982, or in bonds back in 82. Was inflation going to be there forever? Or was the 18% returns you were given in bonds exceptional? Was the PE of 6, meaning the cult of equity was dead? Or was there a long-term opportunity in America and the global economy to revive itself? I think crypto is here to stay. The blockchain development will come. I think the ICO market will develop to be rich and deep and as large and as important as the equity market is now. It'll be like the credit market. It'll be an ancillary, a big part of the financial market. So if you're looking for the future, and if you're looking for where the money will be in the future, where life savings will go, it's going to be there over time.